There are a lot of stressors on the global economic system right now. How do you describe where we are?
It's a sharp slowdown, including even China. So we've seen the world growth fall by half since January in terms of GDP growth, but there's also shortages, there's inflation, and the food shortages for the poorer countries are becoming a significant concern. They already are.
I mean, global inflation, it's not just the U.S., it's other wealthy countries around the world, but you're also describing a recipe for global instability.
It feeds in when there's not enough food that for weaker countries, poorer countries, that causes instability, and it's a big factor in the turnover of governments that's been occurring in quite a few of the countries.
So COVID caused the deepest global recession since World War II. Now, the world economy is in danger because of this Russian invasion in Ukraine. How do you avoid a global recession with all of these factors?
Some countries, it's going to be very hard to do that. I think that leadership from the stronger countries is very important. There are a lot of possibilities, tools. For example, the central banks have many more tools than in 2008. There are regulatory tools that they have. They now hold huge bond portfolios. Those could be, those are all funded by money from banks. The bottom line is there needs to be lots more production, and that's most available to the strongest countries. The U.S. is the world's biggest economy and can increase production more than anybody else.
So if you were talking to Jerome Powell, the chair of the U.S. Federal Reserve, you would say focus less on interest rates, focus more on what?
He's got multiple tools. One is regulatory policy. The Fed is an important regulator of banks, so let the banks lend more. But then also on the bond side, reducing the bond portfolio would return more money to banks. All of the money being used to hold the bond portfolio comes from banks. And if they had more, they could lend. And also the non-bank sector of the U.S. economy, that's one of the most innovative, and it could put more money into the supply chain.
So a State Department official said a few days ago, food crisis will be at least a 3-year problem. What time horizon do you put on the food crisis and the energy crisis?
I'll say one thing. It's possible to produce enough to soften that crisis. But at the rate that we're going right now, the fertilizer isn't being made. You know, fertilizer comes, a giant source of fertilizer is from natural gas through the ammonium channel into the most useful fertilizer. And it also is used to make the electricity that converts the minerals into fertilizer. And that's just not happening. So a lot of the world is shutting down for lack of fertilizer. And then those shortages of crops will last for multiple years. We need to break that cycle and do it pretty forcefully now through announcements.
The Federal Reserve Chair said this week in this country that recession is certainly a possibility, in part because of higher interest rates. Citigroup puts the odds of a recession at 50%. What's your projection here for the world's most important economy?
We put out a report 3 weeks ago that didn't have the U.S. in recession, but we said in downside scenarios there could be. And so I don't disagree with those estimates that you're saying there.
So do you agree with Fed officials when they say it's going to take at least 2 years, a couple of years, before we get inflation back down to 2%?
It's going to take time to come down, but again, that depends on what's your forecast for oil prices, for natural gas prices, for fertilizer. It's going to take months and months and maybe 2 years to bring inflation back down.
Thank you very much for your time.